So here we are again, guys. Silver is pushing $50 an ounce. It happened in 2011, and of course it happened back in 1980. And that's what I want to talk about today, because as we get closer to $50 an ounce, the comments are starting to roll in more often and more often about how $50 an ounce doesn't mean anything. 1980 was the real all-time high, adjusted for inflation was $180. And even people saying, I'm not even buying silver until it breaks its real all-time high. Yeah, I've heard them all. But here's the thing, that 1980 high in silver that everyone loves to bring up, $48, $49, $50 an ounce, that really isn't a real all-time high. And in this video, I'm going to show you exactly why this time is different and why the market we're in right now is nothing compared to what it was in 1980, and why, to be frank, you should really just completely ignore what happened in 1980 altogether, at least in terms of talking about silver and its all-time high. So guys, let's get into it. But before we do, as you know, my channel is sponsored by SD Bullion, and I just want to give a huge shout out to their Docs Deals page every week. They have had some great deals on their Docs Deals page. There's new ones every week. So guys, I will put a link in the description below. And if you're looking for great deals on silver, make sure you check it out today. And thank you to SD Bullion for sponsoring my channel. So I want to give you a quick history lesson on what happened in 1980. And listen, I understand that this can be boring, but if you don't know what happened, I really suggest you stick around and listen. I'll make it quick. But when people bring up 1980, they talk about it like it's some sort of golden benchmark for silver. But in reality, they usually leave out what really caused it. Because you see, what happened in 1980 wasn't some organic rush of demand from normal people like me and you. It was literally a full-blown market corner. You see, two Texas oil billionaires, also known as the Hunt brothers, I think many of you know this, they decided that they wanted to hedge against inflation using silver. Now, at first, this made sense because in the 70s, inflation was rampant, gold prices were going up, and the dollar was tanking. But the Hunt brothers, they didn't just stack silver, they tried to own it. They started buying physical bars by the truckload. I mean, literally, they were flying pallets of silver out of New York on chartered planes, and at the same time, they were loading up on massive futures contracts. At one point, they controlled more than 1/3 of the entire world's deliverable silver supply. That sent the prices from around $6 an ounce in 78 to almost $50 an ounce by January 1980. But here's where it all went south, because as the prices kept soaring, the exchanges, mostly COMEX and the Chicago Board of Trade, they got nervous. They saw one family essentially cornering the market and decided to step in. The CFTC, or the Commodity Futures Trading Commission, put new rules in place that you could only sell contracts, not open new long positions. It was called the Silver Rule 7, and overnight the market flipped. The Hunt brothers had billions of dollars tied up in silver, but most of it was on margin, meaning borrowed money. When the prices stopped climbing and started dropping, brokers hit them with margin calls. They needed to put up more cash to maintain their positions, and they just didn't have it. And that's when the cascade started. They were forced to sell contracts just to cover loans, which dumped out even more silver onto the market. And within days, the price collapsed from $50 all the way down to $10, an 80% crash. Even the banks that lent money to them had nearly failed, and regulators were tightening everything down, and the entire spike, it disappeared as fast as it came. So yeah, the $50 print in 1980 was never, quote unquote, the fair market value of silver. It was a leveraged house of cards that fell apart the second the margin calls hit. And when people say, well, adjusted for inflation, that's not $180 an ounce today, technically that's true, but it's completely meaningless because the number was just based on panic, leverage, and government intervention, not real fundamentals. Now, if we fast forward 45 years, this time, the run-up in silver has real reasons behind it. I mean, we're not dealing with two billionaires trying to squeeze the COMEX. We're dealing with global industrial demand. We're talking solar, EVs, electronics, and more, and a worldwide loss of trust in fiat currencies. In 1980, the U.S. national debt was just under $1 trillion. Today, it is closing on $38 trillion, and it is growing billions. I mean, guys, billions every single day. Back then, there were no ETFs, no central bank gold and silver buying sprees, and there was certainly no global push towards electrification. But here we are in 2025, and now silver isn't just a store of value metal anymore. It's basically essential for the modern world. I mean, the US literally just named it a strategic metal. Solar panels alone, if you think about this, eat up roughly 15 to 20% of the annual mine supply. And unlike 1980, we actually have record low above ground inventories. Registered silver on the COMEX is near multi-year lows pros, and industrial users are fighting over the same ounces stackers are buying. So this time, and keep in mind, none of this is financial advice, guys. I'm just the guy on the other end of the microphone before I say this, but this time, in my opinion, it's not a bubble, it's a crunch. Now, when people look at us approaching $50 an ounce again, a lot of people like to call this like the brick wall. Like, $50, it was the top in 80, right? It was the top in 2011. So they'll assume it'll be the top again now, but let's be honest. I mean, both of those $50 events were driven by totally different conditions. In 2011, silver ripped from $18 to $49 an ounce in less than a year because of fear from the 2008 crisis, quantitative easing, and retail mania. Then it crashed. Today, it's been slower. The grind up, granted, keep in mind that I do get that we went from, 38 to 48 in like a month. But I mean, for the most part, other than that, it's been a lot slower. And when we had pullbacks this year, they were short-lived and buyers came back strong after every one. And that shows real support in the market. And keep in mind, I'm not talking about retail demand because we've been talking about retail demand being low. I'm talking about demand for silver on the COMEX, which is what drives these prices. But here's the thing. If silver breaks 50 and hold, that old ceiling becomes the new floor. And that's where things, I think, get interesting because you're going to see mainstream media finally start talking about it. And it's already kind of happening, isn't it? I showed in a video recently where, there is actually articles from mainstream media talking about silver again. But, the algorithms are going to kick in. Institutional money is going to start to flow in because momentum funds love a technical breakout. That's what could send silver to 60 or even 70. Not mania, but recognition. Now, I get, by the way, though, why people bring it up, and it feels like it's a been there, done that moment. And if you're just looking at a chart, it does look similar, big spike towards 50, but the context, I think, is completely different here. We already touched on it, but in 1980, inflation was really high, but still manageable, and debt was tiny by today's standards. Now we fast forward to 2025, and inflation is baked into the system. Debt is exploding, and the Fed is stuck between rate cuts and fiscal insanity. I mean, remember when Keith from Coin Crew said when I talked to him the other day that the economy now supports $50 silver in a way it simply couldn't back in 2011 or 1980. Back then, the price was ahead of the economy. Now the economy is catching up to silver. So what does this all mean for you and me? Well, I mean, first off, I think it means that we can stop chasing the mythical real all-time high that was based on a bubble. $50 in, today isn't a repeat of 1980. It, in my opinion, is a confirmation that silver's finally getting repriced for the world we live in today. And if you're stacking because you believe in sound money and you want to preserve what you've earned, you don't care if it's $25 or $60 an ounce. You just want to hold something real, tangible, while the world prints paper, while the government continues to print dollars and put them in the circulation. And Keith, going back to that interview, even said that silver isn't about making money. It's about preserving money that you've already made. And that's exactly why I'm still stacking today, even with silver nearing 50. So yeah, you can keep comparing 2025 to 1980 if you want, but it's a lazy comparison. Completely different economy, different drivers, different market structure. This isn't two billionaires playing leverage games. This is millions of people around the world realizing that the dollar isn't forever and that silver has real value. If we cross that $50 mark again, remember this time it actually means something. Again, my opinion only. Anyway, guys, I'd love to hear your thoughts down below. I would love to see some comments on this video. I'm really passionate about this topic, but I do want to know, do you think silver breaks 50 and keeps going, or does it stall out like it has in the past? Leave a comment and let me know. And if you found any value in today's video, do me a favor. Don't forget to like and subscribe. It really helps me out and helps out the channel. Other than that, guys, I just want to say stack smart, stack heavy, and I'll see you next time.